Hey folks, if you're trading crypto in any capacity, Bitcoin, XRP, any of the cryptocurrencies, there is a signal that continues to happen over and over again. And people, you need to know about it because you're selling your crypto at exactly the wrong time when you should be buying, and you're buying when you should be selling. And if you don't know this signal, you're going to continue to be on the wrong side of the trade. So I want to share it with you in this video. It's really important. It's going to make you a lot of money. So stay tuned and let's go. Hey folks, it's Jeremy Whaley here from Trade Maestro. Hope you're doing fantastic today. And I want to share with you some signals that happen in your crypto charts that most crypto traders just don't know to look for. And in fact, because you don't know to look for it, you misinterpret it and you end up doing the exact wrong thing at the right time. How's that make you feel? So I want to get that flipped over for you. And what I'm specifically talking about is a signal we see with something we call candlesticks. So I want to share this chart with you. If you're not used to charting, it's your standard chart. This is what a stock chart looks like. It's what a crypto chart looks like, futures, Forex, anything that you're going to trade. And the first thing I want to say about crypto traders is most crypto traders, because they've bought into the idea that you're just going to buy and hold for dear life or buy and hodl, they don't really learn the analysis part. And then what happens is they get caught in the emotional cycle of it. So when it starts to sell off, it's emotions through the roof. It's like, oh, it's panicking. Let's go. It's crashing. What do we do? Or when it starts to go up, it's to the moon. And neither one of those are actually a healthy emotion. The truth is, crypto, just like any other market, it's very predictable and it's very easy to trade if you know what you're looking at. But I want to come back to this chart here and I want to introduce you, if you're not familiar with something called candlesticks. It's these green and red things that you see on the chart. Okay, so the red ones are more selling days when the crypto has gone down, and the green ones are days when it has gone up. And the one that I really want to draw your attention to is this line at the bottom. Okay, this line right here, it indicates that the trade traded all the way down here at the bottom during the day at some point. Okay, so people see that and their initial reaction is, this is really terrible. Things have been going down. In order to explain this, I want to teach you how the candlesticks are constructed and how you use them, so that I can really teach you this signal. This is called a candlestick shadow, but if you don't know your candlesticks, you wouldn't know that. So let me just kind of teach you really quickly what goes into the construction of a candlestick. There's two types. There's a green one and a red one, usually. Actually, the truth is it's an open candle, meaning there's no shading to it, and it's a solid candle, meaning that it's been colored in. And this is the way the original Japanese candlestick traders did it. So in the original, whenever you were trading with candlesticks, you were doing it usually on paper. Well, always on paper. They didn't have computers then. And so it was usually like a white background or whatever the shade of the paper was, and they would draw it with a black pen or a blue pen, whatever. So your candlesticks actually looked more like what you see on the screen here. Mine happened to be yellow. And if you just look at this, you might say, well, that's a black and a yellow candle. In reality, it's not a black candle. It's a yellow candle that's not been colored in. It's hollow, okay? And that's the way candlesticks are actually created. The way that we formulate them is we have the four key price points: the opening price of the day, we have the high, we have the low. I can talk so much faster than I can write here. We have the low, and we have the closing price of the day. And these four price points, they always show up in every candlestick. Every candlestick is constructed of these. So if it's a hollow candle, like the one here on the left, then the way it's going to be constructed is you have the opening price and you have the closing price, and then the intraday high and the intraday low is going to be constructed with these things that we call the candlestick shadow. So it's just a little nub, if you will, or a little stick coming out of the top and coming out of the bottom. We call it the candlestick shadow. Some people call it a candle wick because, that's what comes out of a candle. But the technical term is shadow. And so when you look at a candlestick like this, the open, the high, the low, and the close, the opening price is always, if it's a hollow candle, it's always the bottom of this main, what we call the candle body. I'll write that word here. It's body. Okay. And if it's a hollow candle, then the opening price is the bottom of that. The low price is always the bottom of the lower shadow. The high is always the high of the upper shadow. And then the close is the close of the real body. Now, if you look at this other candle, It's actually the exact opposite. The opening price is the top of the candle body. The high and the low are the same. And then the closing price is going to be the bottom of the candle body. And that's how you know if it was a higher close or a higher open, or a lower close or lower open, is based on the shading of the candle body. And so in the historical form of candlesticks, this is how it was created. You always knew if it was a hollow body candle, then it was a higher close than open. If it was a solid body candle, then it was a lower close than open. And for literally almost 300 years, this is the way we've traded with candlesticks. Well, today in modern society, we do it very similar, but a little bit different because we have all these fancy schmancy computers. And you'll notice that most of your candlesticks that you see on most charting softwares are going to be shaded red or green. What I did here is I've kind of hollowed out my green candles because in today's world, green is really the higher close. See if I can do it this way here. A green should be like a hollow candle that looks like this, and a red candle is a lower close. So technically, if it was really drawn the right way, it would be drawn like this, and it would be drawn in, and you'd have your candle shadows like that, okay? So there you go. That's how you construct candlesticks. Now, that's kind of candles 101. Now what I want you to understand is how we create those lower shadows. And the way that we create that lower shadow, this long lower stick at the bottom right here, the way that is created is at some point, if you just look at this candle, at some point, it opened the day. Well, that was the opening of the day. That we know that point. But at some point during the day, it traded all the way down to here. So intraday, if I were just to draw that candle right here, intraday, at one point, it was all the way down here, and it was completely a solid red candle. But what happened is this lower candlestick shadow, it shows that the bulls actually came back in and pushed it up. And even though you have a solid red candle, that long lower shadow shows that the buying pressure was there and it was driving the price back up. Well, this is a really important signal. For people who don't know how to interpret your candlesticks, they look at that long lower shadow and they think, oh, it's just really bearish. It's actually the opposite. What it shows is it shows incredible buying pressure, and it usually leads to the turn of that move. So when people see it, a lot of times what happens, they just start selling and they start dumping their crypto, or they dump their stock or whatever it is that they're trading. And then the next day it just turns around and they get all frustrated. Well, that's exactly what happened here with Bitcoin last week. If you look at this, you'll notice that the very next day, we had a little green candle, small red candle, then a big green candle. And ever since then, we've had some small little candles that don't really mean a whole lot. You might look at it in this context and think, oh, well, it's a trend that's selling, but I'm going to show you in a minute that's maybe not true. Rather, what you're seeing here is you're seeing the regular ebb and flow of the momentum, in this case of the crypto. But this happens with everything you trade. So when you learn to trade anything, if you learn to trade stock, you learn to trade Forex, it will apply straight over to crypto as well. Or if you learn to trade crypto, then you can apply it over to stocks. So let me show you a couple of other examples here. And what I want you to see is it's not just the lower shadows that matter, but what also matters are upper shadows. And if you look at these turning points, you will see that lower shadows down at the bottom generally turn into a bullish move, and upper shadows up at the top turn into a bearish move. Isn't that interesting? And you can look through here, you can see these lower shadows and these upper shadows at almost every one of the turns. So if you will learn to interpret that, then it can give you an edge in recognizing when the trade is about to turn one way or the other. But more importantly, it will prevent you from doing something foolish, because what a lot of people were doing last week when they saw those big red candles, they're bailing, they were just dumping their Bitcoin left and right, and turns out that it was about to bounce, and it wasn't a tiny bounce. I mean, it bounced from about 50,000 up to 62,000 in 2 days. So it's 12. If you happen to have a whole Bitcoin, it's $12,000. That wasn't shabby, right? Well, let me show you some other stuff that was happening in this chart, and this might give you a little bit of peace of mind as you move forward. The other thing that happened here is if you look at where that lower shadow occurred, that was actually something we call support. Now you'll notice that another shadow had occurred there not long before. And you have to go back in time quite a ways, actually before this phase of the trend. I'm going to turn my lines on, And watch this. I know it just got really, really messy, but look at this support line that I had drawn in here at 54,000. And you see that that long lower shadow occurred at this support line. When that happens, don't worry about the rest of these drawings for now. Just stay focused on what I saw or what you saw. When that happens, when you see that long lower shadow at a support line that you know is already established as a support, not every time, but more often than not, we're talking like 9 times out of 10, maybe 95% of the time, it's going to actually go the other direction. It's not going to keep selling. It's going to go the other direction. It happens over and over and over again. So it gives you peace of mind rather than freaking out when you see those long lower shadows or those long upper shadows in your candlesticks. You now know that it actually means the opposite of what you think. It's counterintuitive, if you will. And having that piece of information is really insightful and it gives you an edge. Now let's talk briefly about where Bitcoin's going. And, should you be bailing on it? Because as I said, some people are looking at this and they're thinking, oh, well, this thing is dumping. It's going really, really bad. Well, actually, it's not. I'm going to turn these lines on again. And again, don't freak out because I know there's a lot there. If you don't know how to read them, maybe you don't know where they came from. But these are lines that I've had on here for a long time. And what you see is the top of Bitcoin is getting very well established. And we've got this bottom that's getting very well established. This is actually a trading pattern known as a channel. So instead of Bitcoin crashing right now, what's happening is it's consolidating. This is healthy. This is really, really good for your trends, okay? Stocks can't go straight up. They don't go straight down. Crypto does not go straight up, and it doesn't go straight down. I mean, sometimes it does, but it always has a reaction in the other direction. Okay, so I'm going to zoom out a little bit here and I'm going to show you, keep this in context. This is what Bitcoin has done since last November. Okay, just take a look back in last November, we were down around 16,000. Okay, and now where are we? We peaked out at 74,000. It's natural to have a little corrective move that looks like that right there. It's not a bad thing, especially when you get long lower shadows at your support, at your bottom levels here. That is a good thing. That's actually what you want to see happen. It shows you that the support is there and the buyers are there. Now, I know there's some volatility and it's up 10,000, it's down 10,000. I know that can be scary. But what you don't see is you don't see a trend reversal. If you saw a trend reversal, I'd be really worried. But we don't see that. What we see is we see a natural consolidation, a natural ebb and flow. I think the future for Bitcoin is really bright. I also think it's true for a lot of other cryptos as well. I think the future for blockchain in general is really, really bright, and the future for crypto. I want to talk briefly about XRP because XRP is another one that happened last week. There was two things that happened. Number one, we had all the volatility of the market itself. But then the other thing that happened with XRP is we had this SEC decision, or actually the court decision against the SEC, which was basically saying that XRP is not a unregulated security, which we all knew that. I mean, Gary Gensler, the great Satan, sorry, did I really say that? Yep, I said that. He was just trying to make an example out of XRP, but we all knew it's not an unregulated security. Well, finally, we got the court decision to support that, and you see this huge move. But what happened just before that? What happened just before? Long lower candlestick shadow. And I want you to notice that each of these peaks and these valleys for XRP, we're getting these long shadows. So I understand. I mean, those of you who want to hold XRP for infinity because you think it's going to, $100 a token or 10,000 or 100,000, whatever, you're committed. You're not going to get rid of your XRP. But here's the truth. This was a great trading opportunity that a lot of people missed because they didn't know how to read it. If they knew how to read this, what the truth was about XRP is as it was establishing this bottom right here, you could buy in here around 45 cents and sell up here around 62, 63 cents as it was peaking, and you were getting the signals that this whole thing was about to cycle the other direction. You know how much that is? That was almost a 50% move. If you bought for 45 and you sold for, let's just say, a 20 cent or a 25 cent profit, it's a 50% move in, like 2 or 3 weeks. It's hardly any time. And you can move in and out of crypto the same way that you move in and out of stocks, or the same way you move in and out of anything. In fact, XRP has been really good for that because it's an inexpensive crypto. It doesn't take a fortune to buy a full token. If it does ever, explode and go to the moon, then, you can have your positions. But in the meantime, these little moves are easy moves to get into and get out of. And a lot of times it's those long upper shadows and those lower shadows that are telling you exactly when to do it. So this is just a little immersion into candlesticks and how it can help you with your crypto trades. I really want to see my crypto community learn to read these charts a lot better. It's something we've been teaching stock traders for years. And for any of you that are trading any crypto, it works the same way. But if you don't know what to look for, you don't know what to look for, and then you get caught off guard. And so learn the signals, learn to read it. Crypto is an amazing market. I love it. I just know that the future of finance is DeFi and blockchain. This is where we're going. So eventually everybody's going to be here. But for those of you who've been new to the market, some of you made some great money in it, and some of you have lost some big money because you've been chasing trends. You've been chasing different cryptocurrencies, not really knowing what you're doing. XRP is one of those where I've known a lot of people that bought in at $1, $1.50, and they've been holding for years, and they don't know how to get their money back. You got to learn how to read the chart. So if this has been helpful for you and you like it, then like and subscribe to the channel so you can get some more tips and tricks. I'm going to start doing some more crypto specific videos, but all of the analysis videos that I do on stock or any other market will pretty much all translate straight over to crypto as well. And of course, we got different courses for that over at trademaestro.com. So if you like it, then like and subscribe, and be sure to visit us over at trademaestro.com. I have an entire course just on reading candlesticks, and it's included with every membership. So why not check it out? All right. Until next time, happy trading to all of you. I wish you the best, and we'll talk to you soon.